I've found a lot of private money lenders have came from just going and doing a one-on-one lunch, because that's when we can really get into the nitty-gritty. Because a lot of times I'm interacting with these people, we have families, we have kids, it's kind of chaotic, you can't really get too deep, right? But if you take the time to, hey, let's go get lunch, then that's when I find you can really get deep. They can get to know me a little bit better, and then I can also get to know, what are they looking to do, how much money are they looking to invest, what are their kind of needs, like what do they need to understand and know about a deal or about me before they invest, and we can kind of get into that.
Yeah, Casey, we can get started, man. If you just want to do a quick intro, tell us a little bit about where you're joining in from, and then a little bit about yourself, and then we can jump right in.
Yeah, so I'm Casey Gregersen. I'm sitting here today in Houston, Texas. I actually grew up in Wyoming, grew up in Sheridan, Wyoming, small town up there. And actually, that's where we do pretty much all of our investing now. We've done some investing in Texas, but I've kind of found our little niche market is the Wyoming market. We do the whole state of Wyoming. We also do Montana as well. It's turned out to be, we like it because there's a little less competition up there than Houston. But I worked a little bit of my background is the reason I'm in Houston is I worked for Shell as a petroleum engineer for about 12 years before I left that job, which I actually just left about a little over 6 months ago, last October. And yeah, so been doing real estate full time since then. And yeah, I can dive into my real estate stuff more in general, but to kind of summarize it, we started off just buying rental properties, and then it kind of grew into fixing and flipping, turned into wholesaling because we needed to generate more leads and better quality leads. And when the market kind of got a lot hotter, and now we do property management in-house. And yes, we kind of basically, we go direct to seller, we'll do fix and flips, and we manage our own rental properties.
Nice, man. You and I have that in common. I started out with rental properties, then fix and flip. I don't do much wholesale, but I also have an in-house property management company. I know you and I talk about it all the time, but yeah, man, I'm excited about raising private money. So do you have a presentation, or you want to make it an open Q&A? How do you want to go about it?
Yeah, I was going to go more kind of open Q&A, and yeah, I can kind of go through the highlights of kind of some of the higher level things that I focus on, but I think Q&A would be the easiest.
Yeah, I think that would be great. We can make it more interactive. So yeah, if you want to just kind of share, how did you get started with private money, and what was your first private money raise was like, and how have you scaled that for your business? I think that would be great.
Yeah, absolutely. And kind of maybe back up too from like my background and like why the need for private money came in is, and I think everybody's kind of in the same boat, is when you're trying to get into real estate, obviously putting down 25% every deal or 20% down, like that adds up quickly. You can only do so many properties. So that was kind of the first necessity to do it. And I'd say backing up even more, this was back in probably 2016. Like I first, like a lot of people, I read Rich Dad, Poor Dad. And then I started getting in a bunch of other real estate books and was listening to Bigger Pockets. But one of the big books that I read that really had an impact on me was Brandon Turner's book about, I forget what the title is, but it's buying real estate or how to fund deals with no money down. So a lot of that book talked a lot about creative financing, but it also talked about raising private money. And that was one of the kind of first things that kind of got me thinking, okay, how can I take down more deals where I got to put down 25% without me having to fund it all? Because just a little bit more about my background is I had a good W-2 job, but wasn't this crazy, but I was only, probably 25, 27 at the time. So I was making maybe a little over $100,000 a year. So, and I had a family. So I didn't have all this extra money to go put 20% down on every deal, but I did have a good W-2 job. So I worked well, or I had and I spent a lot of time building strong relationships with small banks over the years, but still kept running into that problem with, okay, where do we get the 25% down? Right. So that's where I kind of started bringing in private money lenders. And to kind of start out, it was just like, I think a lot of people advise you guys, was just friends and family. And I just started posting and talking about it on my social media about showing projects we were doing, talking about our fix and flips. And that was the kind of the first, and honestly, still today, that's really the most effective way I found to raise private money, is just talking about our deals on social media. We're starting to maybe perfect it a little bit more, and we still got a long ways to go to where I've got like a team of I've hired VAs to help kind of build out the content to where I can stay in front of people and kind of build like a CRM. And I guess maybe I'll get to that a little bit later, but so kind of 0 to 1 starting out is just talking out on social media is kind of the best way to get out in front of a lot of people. And backing up a little bit more though from that is going out to lunch and just meeting people and telling people face to face, right? That's going to be the most effective way that you can raise private money, is just telling people what you do and letting them know like, hey, this is, for example, what I did is I said, hey, we've got, like, I've been investing in real estate for a couple of years. These are the deals I've done. This is my knowledge. This is my track record. But that said, I'm not able to take down as many deals as I would like to because of a lack of capital, right? And so that's typically the easy story that I tell to people. And then that kind of grows into, hey, how can they participate, right? So step one, I think, or the most basic fundamental thing is having conversations and telling people wherever you're at, whatever social circles you're in, just telling people what you do and let them know and see where that goes. And then booking a lunch from that. I found that like a lot of times I'll let people know what I do and they get interested. And the next big, really easy step, and everybody's just obviously our culture and how a lot of people like to get together, is just go to lunch and have a one-on-one. And I've found a lot of private money lenders have came from just going and doing a one-on-one lunch, because that's when we can really get into the nitty-gritty. I mean, because a lot of times I'm interacting with these people, we have families, we have kids, it's kind of chaotic. You can't really get too deep, right? But if you take the time to, hey, let's go get lunch, then that's when I find you can really get deep. They can get to know me a little bit better. And then I can also get to know, what are they looking to do? How much money are they looking to invest? What are their kind of needs? Like, what do they need to understand and know about a deal or about me before they invest? And we can kind of get into that.
So when you first started posting, were you just posting about the deals that you were doing, not asking for money, not asking, hey, do you have money to invest? Or were you, the post you would make, hey, look, this is what I'm doing. If you're interested in learning more, reach out to me. Kind of what was your initial post was like, and what are you doing different now? Or is it like you're doing the same thing?
Yeah, I go back and forth with that all the time, to being more direct and having kind of like, hey, are you looking to invest? Here is an option, right? To where just telling what I'm doing. So I try to do a mix of both. And yeah, it depends who you ask. And it honestly depends on your audience. Like, if you want to be very direct and say, hey, this is what I'm looking for, or just showing what you're doing. But I think either way works, and it really depends on your audience. So I guess my answer would be do a mix of both. Like, I try to be showing what I'm doing, but I also try to put out some posts and some videos where like, hey, here's a deal. And this is actually what I'm trying to do more now is, hey, here's an example deal where we partnered with a private money lender and this is the return they got, right? So that's a good one. That's a really good way, once you've started to do this and you've repeated it, is showing case studies and examples. But when you're first starting out, yeah, just say, hey, this is what I'm doing. This is how I'm doing it. And I was very forward though, even in the beginning. I'm like, hey, I would love to have a conversation with somebody if they're interested in partnering in a deal.
Yeah, that's how, even when I look back, when I started buying rental properties, I kind of got to the same stage. I was on a W-2 job and ran out of cash, but I would go to local REIAs and then I would just talk to people about what I was doing without directly asking them for money. And when people would come and ask me, hey, can I, like, what are you doing? Like, you could just tell who was more curious, and were they curious from the point of view of learning more, or did they have some money to invest? And I'm curious to find out, like, for me, what has helped. And even now, I actually got a message from one of my friends who lends money to me. He's like, hey, I have $200,000 available. Do you need something? Like, this is without me even asking. But what started happening was, when I started, like, I would borrow money and I would make sure I was paid them back on time. Then, they would start with 50,000 and then go up to 100, then 200. Is that kind of what you notice? Like, people would start out with a smaller amount just to build that trust. Like, how was that journey for you?
100%. Sharad, I'm glad you brought that up, because literally we just went through this as we started to do our first, like, I was raising a fund, like an equity fund, to take down real estate. And as I was trying to go and get commitments from like $100,000 for these people to go put it in for 5 years, maybe on a big multifamily property. Like, that is, even with my track record of doing this for like, I mean, yeah, I've been working with private money lenders for probably 7 years now. And even with that track record, that was still a challenge to get people to come in and put $100K up for 5 years. And even though the return looked really solid and it's a really pretty low risk investment, right? But what I found is way easier, and literally just in the last 6 months, I found this out, is, hey, go and just put people into like if you're doing it works the best if you're doing a fix and flip or even maybe a wholesale where you need some transactional funding, is get them into a short-term deal that's like maybe 3 to 6 months or less than a year, and put their money to work and then pay them back interest, and basically have them put their money in and then give them back their money plus interest. And then, as Sharad just said, then they're itching for the next deal and they're ready to go, right?
When you started, did you have any minimum that you were looking for people to invest? And then do you have any minimum now?
Another great question. Minimum, or initially, we took like 10,000 from somebody that I knew. It was a good friend of mine. Now at this point, that would probably not be worth all the headaches and paperwork. But at the same time, if this person who has 10,000 is somebody who might have 100,000 later and down the road, that's, I think, still a good investment. Because again, anytime, for example, I just had somebody reach out with 25,000 the other day, and I was kind of thinking, oh man, that's not maybe worth it. But if this is somebody who can have a longer relationship, I would 100% do it. So now I typically look, but even still now, I mean, there's still a lot more people that I'm finding about 50 to 100,000 is kind of a good comfort level.
Got it. Yeah, that's kind of where we're at. Like my friend who just messaged me, like he had 50,000 to invest a couple of weeks ago. I'm like, you know what? I would love that, but like it's hard for me to allocate that money towards a specific project, that I can like buy a house with this and say, hey, this money belongs to this project. I'm like, like minimum we want is like 100,000. So for us, our accounting purposes, we can take the entire amount and allocate it to one project. And then when we sell, the money goes back. So it's interesting. But yeah, you're right. Like when I first started out, I would take like 10, 15, 20,000 just to kind of build that relationship and do short term, and then just kind of build on that trust. What about the paperwork? I'm curious kind of what paperwork did you need when you first started out, and what paperwork are you doing now? Are people that you're borrowing money from, do they have a mortgage on the property, first lien on the property? Like, what does that process look like?
Yeah, I know that leads me in perfect, because I was about to say a really good way to structure deals early on, because if you'll talk to a lot of people that say, hey, the best way to invest private money is to do a first lien position. But as Sharad just said, there's not too many houses you can buy for 50,000, right? But the best way that I found to do it is you could get somebody in for 10, 15, 25, or 50,000. And what I did is I put them in as a second lien on an existing property. So initially I would go to, and this is actually how I first raised money, was people I had relationships with, right? Like I wasn't soliciting them. These people I knew, I would say, hey, let's do a $25,000 line of credit, essentially. And they were basically the bank. And then what I would do is we would have two documents, right? It was the promissory note, which outlined the terms, and then a mortgage. And it would be a second mortgage in that case. Because I would show them this rental property and say, hey, here's my rental property. Here's what it is worth, today's market value. Here's what I owe on it. Here's my equity. And then I would show their little sliver. Basically, they were a little piece of the equity, to where maybe they would allow me to go up to 85% of the value, but it was a stabilized rental property. So I still felt like it was a good investment for them. They were protected. And also the property had cash flow. And honestly, some of the investors that I work with, they're like, I like this because I know this is a good property of yours that has cash flow and equity. So I know you're not going to let that thing go. So it made them feel comfortable. And then it was well documented to where they felt secured. I mean, if something were to happen to me, literally that property cannot be sold without them being paid back, right? Because the mortgage was filed behind the bank. It is important that if you're doing this, you let them know, hey, you're in second position behind the bank, but they're still in a good spot.
And then are you personally guaranteeing the loan?
That's another good question. We've kind of gone back and forth. Typically, it's in my LLC's name, but that's one of those things too, where it's like, they know we're good for it. Like, yeah, I mean, we're going to take, I guess that's another thing I'll share too, is a lot of times we put people into deals where I structured the deal to where they were actually not going to, like, I've done some more like profit share deals where the profit share wasn't going to quite hit percent. It was 10%. It was going to be like 4 or 5%. And so they weren't even taking a loss. They were just taking less. And I'm like, you know what? I'm actually going to take a little bit out of my profit because I want to at least deliver 10%, because I'm thinking more of the long term. Like, I want these people to have a good experience, go tell more people about investing and be able to further grow, right? So I took a little less on that deal to ultimately get them a good return. And in the same time, if I had to take a loss, like I would have ate the loss.
I've had to do that also, just to maintain the relationship. Honestly, like in private lending, it's like relational business, right? I mean, the more you nurture the relationship, and you would be surprised, at least I was, raising money from people that I never thought would be willing to invest with me on, or invest the kind of money that they did in some of these projects. But I've done deals where initially when I was starting out, I would do, hey, you just provide the money, I'll find the deal, I'll manage the entire project, and you'll get 50% off the net return. And then with the minimum guarantee also, that where I would say, okay, we're gonna make 40,000 on this deal, you would get 20. Even if you make 30, I would say you take 20, I'll take 10. I just want to, respect the relationship and kind of what we did up front. And then they would, they would respect that. They would come back with more money because they know I'm good for it. I'll make sure I cover their part. So with that, what sort of interest rate are you noticing right now, that you're paying for your private lenders?
It really depends on the person you're talking to. We've done my range right now is probably 10 to 12%. We're not typically doing more than 12%, but even like it's back to like 6 months ago, I was actually trying to shift back to more of like 8% because I was giving these people a good, safe, secure return backed by real estate. So I was going to start to shift more to 8%, and I'd like to do more at 8, but realistically in the market, not too many people are getting excited under 10%. So typically,
and are you doing any points?
No points. Yeah, that's one nice thing is I work with. Yeah, to me, I think that's the big difference. And I'll sometimes I've had private money lenders bring up points before, and I'm like, no, this isn't like. Yeah, either way, like you're not a hard. If I'm going to get hard money, I'll pay points, right? And sometimes I got to do that, but typically my lenders, they're getting a better interest rate, and yet to me that's the benefit of like raising private money is not paying points, right? So typically we don't pay any points.
And are you paying them back monthly, or are you paying them back after the project is done, or you refi your money out of the deal?
Yeah, depending on if it's a flip, we'll typically just do one payment at the end, which is a lot easier. And that's another thing too, is depending on how they want to play their taxes. Sometimes if they just want to roll it all in, like they can kind of push their tax, which they're basically, because if I pay them back and they don't roll the money, they're going to show that income, right? But if we roll it, that can be a benefit to them. So a lot of times I'll just try to put it on the back end, and then we'll figure out if they're going to roll it or not. But I do have some where it's like, hey, it's a line of credit. I've had some lenders that are like, hey, I want to be paid monthly. That just makes them feel better. And that's actually a really good thing, because then they see a check coming in every month. They build even more trust. So then when you go to those people a year from now and they want to invest more, then they've actually been seeing payments. So that helps too.
And Corbin has a question. What is your typical interest again? Are you, an average is okay. Are you averaging like 8-9%, or it's more like double digit, like 10-11%?
Yeah, we're definitely averaging between 10 to 12. Honestly, we're probably averaging 11. Yeah.
Yeah, I think that's where kind of we're at. I was just checking. I have a line of credit with the local bank that's at 10.25%. And then, but the private money that we do straight 10%. It used to be 9, but now, a lot of banks are giving 4.5% on saving. So we've had to like bump it up to 10%, just to kind of be competitive. And Brooke has a question. Are you offering a guarantee as far as months? We will pay you 6 months, even if, we only hold it for 4 months?
Yeah, typically not. Typically we'll just, I try to have 2 different offerings. Like, hey, if you want to be short-term and be able to get out in some deals, we might be out in 45 days. Like I'm doing a deal right now where I'm literally marketing the property while I'm under contract. I'm going to hopefully have it under contract, and then I'm going to flip it in 30 days. So those people are going to get their money back right away. And I'm looking for that investor too that's looking for that, right? To where they've got, they're getting their money back in 30 days or 60 or 90, right? But if it's somebody who's like, hey, like, I don't want you to just give me, because there are investors too that they're like, I don't want to mess with this. I don't want you to give me my money back in 60 days. And then I got to figure out where to put it again. So those people, I try to put them into more of like a fixed 12 or 24 month deal. And again, that's when I'll probably go to like a second lien on a property. Or if you have a free and clear one, that's even better. And I think you can negotiate an even lower interest rate based on that. But yeah, it depends on the lender, whether we do it. But typically, yeah, we'll try to just stick it on the back end.
All right. And Philip Arthur has a question. I'm having to pay more percentage because of how well the stock market has been performing. It's a great question. So have you run into that, Casey, where someone says, hey, I can make 8-10% in mutual funds, I should expect more?
No, you know what? You would think that more often, but when you start to really, and I thought that way, I think a couple of years ago, but really, if you pitch it correctly, well, they're not seeing the volatility that the stock market sees, right? That we're going to show them in real estate. So I think typically if they understand, if you really want to get into like a sophisticated conversation, real estate is a much safer bet and it's going to have less ups and downs, right? So typically I think I can counter that one. What's been hard though is lately, like I would say 12 months ago, going and negotiating 8 to 10% was probably easier. Now I go to somebody and they're like, we were talking 8 to 10%. They're like, well, I could put it in a CD and get 5, and that's guaranteed. And I don't have to worry about any of this risk or perceived risk. Well, again, they're investing in you, right? They're believing in you, and they can do all their own due diligence, but at the end of the day, they're investing in you, right? So that's been my more hurdle, is now having to pay probably 10 to 12% based on what they can get in a CD.
Yeah, Philip, I would say the same thing. Like, we actually use stock market as saying, hey, would you rather invest in stock market and have your money, like, not know, if it's going to be worth the same or if it's going to be worth less. And then, we build on the relationship that, hey, you're investing, the asset that you're investing in, we have the relationship. So we're actually using stock market, in our favor. So yeah, I mean, like, and I would say, like, for us lately, it's been the same issue coming up. Hey, I can make 5% just investing in a savings account, with like 25,000 minimum. Why should I give you 8%? So we've had to kind of, do 10% also on our lending. But yeah, let me know if you have any follow-up questions on that. And yeah, Michael has a question. At the end of the year, what type of tax documents are you providing your private money lender?
Yeah, pretty simple. That's the nice part about doing debt, right? And doing like a private money interest rate. When it starts to get into equity, that's when it's more complicated. But for now, I definitely recommend just doing interest, right? Because then it's just a simple, I think it's a 1099 INT form.
Yep.
Right. And we just keep track of the interest we paid them throughout the year. And yeah, it's really just like you do with all your other 1099 contractors that you might pay. You just pay them a 1099 INT.
Yeah, that's what we do when we borrow money from someone. We ask them to fill out a W-9 form. And then at the end of the year, my bookkeeper just takes care of everything. She just prints sees everybody that we paid interest, sends out a 1099 to them by Jan 31st. And I think we're good with that. Yeah. Cool. All right. Who else? Anybody else has questions? I have a couple of other questions, but I want to make sure that I give you guys, if you want to unmute and ask a question.
So Casey, I appreciate you coming on. My path was very similar to yours. I had a good W-2 job, started the company about 6 years ago, had people working it. I went full-time about 6 months ago. I think I've read every post on Bigger Pockets, started out with Rich Dad, Poor Dad. So it sounds like we have a similar path, and we're kind of at the point right now where this is very pertinent to us. We never had to raise private money in the past. We're doing primarily fix and flips, but right now we've got like, I think 16 going. And if you talk about, having to pay some closing costs, down payments, and then wait for repair draws on them, you're talking about $50,000, $75,000 each property, which takes out your cash real fast. So we just recently started doing these, we call them bridge loans of $50,000. We're doing 12%, no points, second lien position, pretty much everything we talked about. I did get the objection yesterday of the treasury bills at 5.5%, so it's much safer just for me to put my money in there. It's not worth all the paperwork I need to do with you guys to get a little bit more return on something when I'm in a second lien position. So this is all very pertinent to us. My main question is, where do we go from here? Because we have our hard money relationships, but obviously we like to find some whales to where we can get away from the hard money in general. Have you found any success outside of, just your personal network of locating different channels or places to really find some big whales that can replace the hard money lenders? Maybe start out with $500,000, $1 million, and then once relationships built, go up to $2, $3, $4 million, so we can get away from private money. Have you found any of that? And if so, how are you structuring those?
Yeah, great question. Yeah, you're right. It's a very, very similar path. So I would say, yeah, we're literally trying to do that same thing now. One big thing is kind of stepping up our marketing. So I talked about the social media at the beginning, and actually I was starting to get ahead of myself because I got excited, but really the next step now is is putting out consistent messages and putting out consistent content on So the one tip would be Facebook and LinkedIn, right? Those are especially LinkedIn. A lot of people don't understand how like valuable LinkedIn is. So putting out your content on LinkedIn is big. And you can also do we've only scratched the surface on this, but you can do a lot of really targeted searches on LinkedIn to find those type of people, those whales you're looking for, right? So that's one tip. And then we just started using just a dedicated CRM. We use actually Go High Level just because I can build out like more of my funnel to where I can bring in, because we use REsimpli for all of our direct to seller, all of our fix and flip, even like our dispositions when we're selling and wholesaling deals. But when I'm talking like my private money investors, what I'll do is I run them through there, and I'm basically creating email campaigns, because what I want to do is I figure there's also that demographic that's maybe not on any social media that I'm not touching. So, but I maybe got their email or met them somewhere, right? Because I want to always stay top of mind with these people. So we're starting to have more success just email campaigns. And then anytime I close a deal now, what we do is anytime I put a private money lender in a deal with me, anytime I have an option for a private money lender, when we just closed this big 63 unit apartment deal, we blasted out, hey, this is what we did. Here's how we partnered. But I'm just hitting these people constantly through an email campaign and staying in front of them. So that's my hope, is some of those people that have a $500,000 or $1 million will start to see me and see all my deal flow and kind of start to build some trust, even though I'm not seeing them every day, and build the trust that way. That way they're ready to go.
Right. Okay, good. I did speak with someone, this was a couple of years ago. He uses all private money for all of his deals. And, he basically said, some guy sitting in a yacht offshore, and, through his attorney, I have access to whatever, $3 billion of his money. And he's not even involved. I just use his money for everything. And I was asking him how he finds people like this, because that's pretty much his primary role. They have a huge portfolio. He said he attends conferences where, the ultra wealthy are at and looking for ways to get rid of their money. Have you ever run across any of those? And do you have any tidbits for getting in those too?
That is, I might steal that one. Honestly, that's a great one. Because I think I agree, because it's like you're trying to tap into these people, and you hear of all these people out here that have all this money that are looking for something to do with it. And you're like, hey, real estate's perfect. What I got is perfect. But even just getting introductions from those people help, but really you just getting out, establish a connection. And I think at a conference is a phenomenal idea, because you could get in front of them, build some rapport, let them see you face it. I feel like those big players and those big money, it has to come from like a face-to-face interaction, at least initially. And then they get to know you, and then it goes from there, and then those people start referring you to other people who have a lot more money like that. So
yeah, I think that's what he does. He goes to these conferences, he meets them, he takes them out to lunch and dinner while he's there, and he schmoozes them and tries to get access to the money. I'm just not sure what conferences he's going to, how he's finding them, and the best to target. So I was curious if you had any input on that. But I appreciate you answering the question.
Yeah, I'm going to take that. It's going to be my action. I'm going to look. Yeah, they're out there.
Maybe I'll see you at one.
Yeah.
I think one other thing that we do, and we've raised money from like random people, so to speak, like anybody that you meet, I would just get into the habit, hey, we just paid this investor, $10,000 on interest, and we have this other deal that we're looking to, close down on. Do you know anyone? Without asking them, if you just say, hey, do you know someone who might be interested in making like 10 to 12% on their money? Like I've had literally my real estate agent invest like $25,000 in one of our deals. Because I was talking to him, hey, do you know, not even with the intention of seeing if he has money to invest, but just asking him, hey, do you know anyone who might be one of your clients who might be interested in investing a little bit of money? And he's like, hey, I have 25,000 with that due. So just like the more you talk about it, kind of what Casey is doing, you would be surprised, who has money to invest. It might be in smaller amounts, but at least, it'll get you started, start building that trust. And even with your title company, I'm always amazed kind of the relationship that I've built just talking to, the person that we work with at title company, and just letting them know kind of, hey, this is what we're doing. If you know anyone, let us know who might be interested, and building those relationships. Hey, Nike, do you have a question?
Yes, how's it going, Sherrod?
Good, how are you, man? Go ahead.
I'm good, my friend. The CRM has been great. This topic
Thanks, man.
actually is one that I have been working on for a while now, just like hitting people up on Instagram and talking to people who know people, and there seems to be more interest than I thought. So it's a pleasant surprise. But I just had a quick question on how much of a hassle it is, I guess, or like practically, because I don't really know how it's like structured legally or how it works with the title company to raise money from a bunch of different sources for a given deal. Like this person puts in 80, this person puts in 20K, and then you end up having like 4 or 5 people in one deal. Is that a headache? And obviously I would assume the preference would be to have one person to fund all of it, but how difficult is it to execute something like that?
Yeah, great question, Eric. Yeah, Casey, have you been in that situation where you had to raise money from multiple parties? How do you handle that?
Yeah, that's a really good question. It is, yeah, the short answer, it is complicated. The easiest way is just try to split them up by property. One thing I just did, right or wrong or different on this deal with, we bought 63 units. It was about $1 million of equity and about maybe 2.8 of bank financing. So I took it down with a partner 50-50. So we each put up 500,000. But what I actually did is I raised, of my 500,000, I actually raised debt to raise my 500,000 of the equity. And what I did though is I put those people in second lien position on different properties in my rental portfolio. Like we've talked, right? They're in second position. So that actually allowed me to bring in, I brought like 4 or 5 people into this deal. I kept it all separate and clean because my partnership is 50-50 with this guy that we bought the property with. And then I've just got these other call them sidecar or just other agreements, promissory notes with these other people. So that's one way to kind of maybe simplify it and get around with it. The other way is you create an LLC. And if you know these people, I don't know the exact minimum, it might be 7 or something. I mean, you're starting to get into the SEC guidelines, but I know if it's a small group of people, you guys can just go put together an operating agreement and line out how everybody's going to get paid and go buy it. I mean, can be done, but also can be very complicated, and would definitely advise you, like, in just talking from experience, it's very easy to go put a partnership together, but then like, you don't really think about all the scenarios down the road and how complicated and convoluted it does get when you're trying to exit or do different things. So I'd be very careful when you're thinking about doing equity and partnerships.
Got it. Yes. I was mainly just interested in the debt side. So on the equity, at the very most I'd go is just going 50-50 with someone that's like an investor or contractor, just for like, a single purpose type thing on one given deal. I was just more curious on like raising debt from multiple people in order to fill my portion of the equity through private money. I assume that the structure most people go with is like hard money and then whatever the down payment is raised through private money. But my goal is to find private money for like all of it, but the price point in my area is like really high. It's like I'm in Pasadena, California, so it's like $900K to find a house that's like about to tip over, so that's what I'm working on. I don't know how difficult it is to find somebody that's willing to fund that much.
Yeah, I mean, that would be interesting, Casey. How would you handle that? I mean, if you have like, let's say $1 billion that you're raising on a property, and then you have 10 people with like 100,000, 150 to like all the way down to 50,000, like how would you handle that?
Yeah, we actually just looked at doing this to basically have a debt. You could just call it like a fund, right? A debt fund where you just do a fixed amount. So it can be pretty simply done. And at that point, you would want to probably go through a securities attorney. But just so you guys know, like, it's not, sometimes people think to go set up a fund or a syndication or get registered through the SEC that like it's this huge hurdle. I mean, it is, but the cost is anywhere from probably $12,000 to $15,000, but you can just do it once and then you can get your documents and then you can leave it the debt fund is a lot simpler than the equity fund, right? Because you're just like, hey, I'm going to pay this amount of rate, or this is my interest rate I'm going to pay, and we're going to raise this much. And you can also raise above that, right? I think you can have a lot of flexibility with the debt fund, and that's how I would do it.
Do they have to be accredited?
Good question. You could do it both ways. There's the 506C and the 5B and a C, right? So one of them you can do to accredited, one of them you can do non-accredited. So you would just you'd usually got to choose though, which one where you're going to go, but you could do either.
Do you have a preference, Casey, on I know each probably has their own hurdles and hoops to jump through, but just as far as a personal preference and the process of getting one versus the other, what you've seen through that?
Yeah, I've seen it both ways. And even I've done it both ways, right? Like I've got some people that are not accredited, but they still want to get in. If I was going to give you just pick one side of the fence, I would go accredited, right? Because accredited are going to be lower maintenance. Like you think about this person that's got 100K to invest, and that's like 5% of their net worth. Like they're going to be less concerned of this guy that puts $10,000 of his 100K. He's going to be calling you a lot and just much more involved, right? So going with accredited, you're going to just your life is going to be better. That's been the biggest feedback I've gotten from my mentors is they're like, work with people who are accredited. And yeah, and that's honestly, there's less liability for you in that situation. So that's definitely the preference. Yeah. But the other piece though, is just understand though, that maybe not everybody's at that point, especially when you start, you're not really prepared to go talk to a bunch of sophisticated, because that's the other challenge is like these more sophisticated investors are going to ask deeper questions. They're going to want to have more of a track record. It's going to be harder to attract that money, right? So early on, you might want to go to non-accredited people to kind of build your track record. And there's nothing wrong with that.
All right, Michael has a question on social media. Do you have separate pages for potential investors where you talk about deals you have done versus the page for sellers you're trying to attract? Are you kind of like, are you setting up separate social media, like, branding for that?
Yeah, we've gone back and forth on that a ton. I basically have found a strategy where I just use my personal account to really push out everything from fix and flip renovations to raising private money to showcasing deals we have. So, but I've created other smaller channels from other companies, like my wholesaling company has its own social media. My property management company has its own. So we've kind of segregated that way, but I push it all out through my personal one. That way my personal one gets all the exposure. But I guess to answer that question in this context, guys, your private money lenders are going to want to see it all, right? So I would definitely be marketing them to, because it's about you, it's your brand when it comes to raising private money. And then you can just highlight your business is what I'd recommend.
Yeah. And I don't do any posting on social media, but I've heard from somebody on our market that they got some notice from SEC about like posting on their social media. I don't know if that's changed or not. Like all the money that I'm raising for myself is through friends and family, just like having one-on-one conversation. But that's something you might, I don't know if that's been an issue, Casey, for you. Kind of, I know someone on a market that was posting on social media, just directly basically saying, it's kind of like, I don't know, it's like offering people the opportunity to invest with them. And I think that's sort of a red flag. So you have to be careful, like what you're posting on social media. Is that correct? Or, I mean, this is like I'm talking like 5-6 years ago. I don't know anything has changed, but I know someone in my market that ran into some trouble, like posting on social media about that.
Yeah, you do want to be careful what you say. I think in general, just keep it more kind of vanilla of like show. And again, it's always fine to say, hey, this is what I did and this is what this person made. And here's a case study, right? But what I do is I just invite people to have a conversation, say, hey, if you're interested in partnering in a deal or investing in a deal or getting into real estate, let's get on a phone call, right? And then I can dive deeper. But I definitely would not advise you to say, hey, here's a deal. We're going to pay 10% guaranteed, blah, blah, blah. Like that's where you could get into hot water, right? You don't want to ever say like fixed returns and really, because it's really, are you selling a security from what? So the conversations I've had with attorneys, like if you're coming across that you're selling a security, that you have to be registered for, right? But if you're just looking and asking for partners and want, just leave it open-ended is the best advice.
Yeah, I think you're right. I think now that you say that, I remember them offering, hey, we'll give you guaranteed 8% or something along those lines. I think that's where they got into trouble. But I see a lot of people posting pictures of checks that they're writing out to their private money lenders and saying, hey, look, this is the money that I made to, this investor that invested with me. If you know anyone that's interested, I think that gets a lot of people interested, those kind of social media posts. Yeah, go ahead, Devin.
Hey, what's up, Casey? You're killing it, man. I appreciate you. You are the man. So there's also regulations with that. So you were talking about a 506C and a 506B. If you have a 506C, you can actually advertise about your fund because you're advertising to only accredited investors. You cannot talk about specific things like he was mentioning, like, oh, we're giving 8% to 13%, whatever like that, but you can't advertise about your fund. If you're in a 506B, you cannot advertise about it. So those are the stipulations with things that where you talk about raising capital, but you can't specifically talk about the fact that you're raising capital for your fund. It has to be all just kind of like, you actually can't even talk about it on your first interaction and meeting somebody. You have to actually set up a follow-up to talk about your fund. So it's a really interesting process when it does come to advertising on social media or anything like that, if you're trying to raise capital on that scale.
So you can talk about the fact that you have a fund, but of course you cannot use the word guarantee, right? That we give you guaranteed 6, 8, whatever percentage that you're saying.
Yeah, and so that's where you see like Grant Cardone talking about all the deals that they're doing and asking people to invest into that. Cardone only advertising the 50 to accredited. He could do that, but like if you have a B, you can't.
Yeah, so I mean, I would always like suggest like definitely consult with your attorney as you get into those situations. You know, if you're trying to advertise on social media. Like again, I've never done it. Like the conversations that I'm having, these are with one-on-one with people that I know are interested or they have approached me. But Casey, are you posting on Facebook, Instagram, or LinkedIn, or like all the platforms?
Yeah, we push them out to all of our different platforms. And yeah, more so just, showing deals that we're doing, talking about other investors that we've like taken down a deal. Like for example, my one strategy I do now is every time I get a deal under contract, I push it out. Hey, here's a deal opportunity for somebody to partner with us. Here's like the numbers on it. And well, you know what? Yeah, sometimes we are putting, like if it's an interest rate, we are putting 12% on it, which we might need to double check. But we actually did go through our and got our security or our 506C. So
yeah, no, it's always like for me, I'll speak, from the side of someone who just invested, who just lent some money on a deal. And this was with someone actually in Texas. And this person had been, I've known this person for like a couple of years. And, he was just like building relationship. I mean, he and I were in the same mastermind. Just building relationship. And then he would just talk about, hey, this is what I'm doing, without ever talking about money, without ever asking, hey, if I know anybody. Like you just talk about all the deals that he was doing. And then one day say, hey, I've been using my own cash. This is the money that I'm looking to. Do you know anyone? This is and he just came and offered what sort of terms that he's willing to give. And then I just said, hey, can I put money into it? And then the term that I got was, it's a 3-year loan, 3-month loan, with 2 points and 12% annual interest rate. But this is kind of how I ended up investing in it. Someone just kind of talking about their deals is just like, we're talking on WhatsApp or other, on text message and calls. But I would imagine it would work the same way on social media. You're just building trust. You're just kind of showing people everything you're doing without, asking money initially, and then just saying, hey, if you know anyone who might be interested, I would love to kind of talk to you or that person. Hey, Narek, go ahead. You have another question?
Yeah, this is all really, really valuable stuff for me. I was just curious, is it realistic to expect to not pay points if you're going through like accredited lenders, or I guess accredited investors?
Yeah, I definitely think it's all everything's negotiable, but I definitely think even with accredited people, I don't think they are all. I mean, some, you might have some that are just like, I'm not lending unless I get points, but from my experience, more times than not, they're not asking for points.
Gotcha.
And
Okay.
and it also depends like how much the other person needs the money. They asked me like they got this deal, they needed to close in a week, and then I felt like I had a little bit of leverage. But then when I'm borrowing money from someone, I just do, hey, I'm going to give you 10%. I'm not going to give you any point. So like Casey said, basically whatever you negotiate, right? If I felt like I was in a position of leverage where I was able to negotiate points and interest rate, but it's whatever you negotiate at that point.
Got it. Perfect. Okay. Then what do you guys think is the first step to get a fund like this set up? Is it talk to my attorney, or is it like something else?
Yeah, I'd recommend a specific securities attorney, and I'd be happy to give you a recommendation. But yeah, if you've got an attorney like you've worked with quite a bit, you can test it with him. But the other piece of it is it's a huge undertaking. And this is the feedback I got before I even kind of started thinking about doing a fund. Was it is a full-time job in itself, and there's a lot, especially when you bring in multiple people, like you're saying, like there's just a lot of administrative stuff. And you've got to make sure you're using the money and allocating it all the time. And so, yeah, there's a lot to it. So I always think I don't know, all the feedback I've got is spend more time on these private money notes. I know you're in a position where you need to put multiple people together. So
Or I
might be
find
the right
somebody
time.
that would lend all of it. I just don't know if I can find that person. Is so I don't know. Maybe if I'm overly preparing, maybe just get a real deal first and then figure it out and see who's willing to lend what and just take it, just wing it, I guess.
Yeah, that's funny too. I was actually just listening to a podcast on this just yesterday. They're like, go find the deal, then go raise the money. And then like, no, you gotta be proactively looking and talking to people. But I mean,
Yeah.
it definitely is easier when you have a deal, but to pitch them on something. But honestly, I'd be having the conversations. You gotta have the conversations before.
Okay.
Be looking
Gotcha.
for these people.
Gotcha.
What
Yeah,
kind
and then,
of, go ahead.
go ahead. No, go ahead.
Uh,
Hunter.
What kind of an acquisition fee or management fee do you charge on the front end, deal by deal, or do y'all have a set fee for your investors, through the acquisition for due diligence and things like that you're collecting on the front end that, obviously they'll get back when they refinance, but just kind of what we're looking at on the front end.
That's a good one too, Hunter. I've seen it all over the place. And we kind of balance, we've gone back and forth on what to do. And honestly, I bet if you ask 10 different private money lenders, you get 10 different answers. I think at the end of the day, if you just kind of look at once you underwrite the deal for them and what their return looks like, and you kind of model that out and show them, and most people that do this understand that there is you put a lot of time and you brought the deal, so you do deserve something. But yeah, honestly, it's all over the board, and really depends. I think for you, right? If you really want to get paid more on the front end, like you can negotiate that, you might not get as much on the back end. Or if you're like, hey, I'm not going to take anything, but I want to get paid more when you get paid. I mean, it's all a balance there.
Well, and that's kind of my thoughts on it. And, we kind of focus on industrial properties, but, the way that we kind of pitch it is, do you want to, do business with guys that, work for free, or, we've got a set plan in place on how we utilize the capital that we're getting. And this is where, we kind of break it down on, through the attorney costs, the due diligence survey, everything leading up to the acquisition of the property, and kind of break it down that way. I just wasn't sure if, that was something that if there was like a set percent, or if we're leaving money on the table, or if we need to structure it a different way. But yeah, that makes complete sense. I'm sure there's 1,000 different ways to skin that cat.
You're right. I love that. That's great though, that the fact that you're breaking it down for them and showing why and justifying it. Like that's really smart.
Yeah, and then I think one other thing you could always do, like if the person that's approaching you, they haven't sort of like set the anchor, you can always set the anchor and say, hey, this is what we have paid our investors. That always, like, if you're not sure, just start with a lower number and see kind of how they react to it. And then, then on the flip side, if you're lending money, just like kind of like when you make an offer on a property, right? And then you don't know what the seller is asking, you want to start with a lower number just to kind of set the anchor at a lower number, versus, if you were going to offer 100,000 and the seller comes back at 300,000, then you're like, oh, maybe my $100,000 is going to offend, versus, you just start out with 80,000 and then the seller's like, oh, I can't go back with 300,000. Like, we're going to be, far apart. So just, that's another thing you could do. Just kind of start out with a lower interest rate and see, without offending someone, and then see kind of where that, what they come back with.
On that, and just, as we get things, but, adding everybody here, to our email list, and kind of going forward, is that something, or, partnering with, have you ever done that, as come on as a sponsor for a separate fund to be the fundraising arm of a separate fund? Because we've got our guys in place that we typically raise from, but as we go into bigger deals, we can never have enough capital. So is that something that anybody here might be interested, y'all specifically, but don't want to limit it to y'all only, but is that something that's a potential?
Yeah. Are you saying you have extra, because I've heard of the fund of funds model, right? Where you would go raise your people that you have, you would raise capital, go put it in, for example, a fund of mine, or you could put it in a Brandon Turner's fund.
Both, because I just want to open up the conversation to, hey, if we were to ever need some additional funding for a deal, is that, something that's open? And, obviously we can exchange information and everything like that, but I didn't know if y'all had done that before, or would even be, entertain the idea of, because we've done it on a couple, if we've got, because we don't want to leave our investors idle either. If we're kind of dry on deals at the time, I want to go find a fund to where we can, keep their money moving, keep the velocity of that money, making them money. So there's no downtime and they're not looking for other people, and the same vice versa. If we've got a bigger deal and we need to go raise extra capital.
Yeah, I 100%. I think that's worth bringing up too for the whole group. Like that's a good way to collaborate and do stuff. And yeah, I'd be 100% interested. And yeah, because that's always the crux that we haven't talked a lot about. I mean, we talked about a little bit whether you're going to put people's money in on a deal and just do a fixed interest rate, and then they get, because somebody asked a question earlier about, hey, how many months do you guarantee? And typically we're just, again, my answer to that was, we're going to, as long as the project takes, we're going to pay them back, and then we're going to try to roll their money. But for the people who want to just keep their money at work going all the time, kind of like Hunter was saying, like those, you want to take advantage of that, but you don't want to get in a position where you've got $1 million borrowed and you're not utilizing it. So that's a great way to kind of pivot and work.
Arbitraging the capital.
Yep. Yeah, that's really smart. And it's totally doable.
Yeah. Thank you, Casey. Anybody else has any last questions for Casey? Cool. Awesome, Casey. Yeah, if somebody wants to connect with you, what's the best way to get hold of you?
Yeah, you guys can, whatever medium you use, my email's real easy. It's casey@gregersenproperties.com. Just make sure you spell Gregersen with all E's. And then, yeah, also on Instagram, we put it, definitely love to connect with you guys there. I know some of you guys, I know Sherrod and Devin and some of these guys on social media. So it's kind of cool to collaborate that way with other people. So I definitely would invite anybody that is on Instagram, follow me there and we'll follow you back. And that's just I like it as a good way to, again, stay in touch and also like help each other's kind of boost each other's brands. So definitely encourage you guys to reach out to me there.
Absolutely. Cool. All right, guys. Thank you so much for jumping on the call. This was a great call. Thank you, Casey. I appreciate, man, jumping on the call and sharing your information. So yeah, if anybody else has any questions, please email us at support@REsimpli.com, and then you can reach Casey at Gregersenproperties.com. Cool. All right. Thank you, guys. Have a great rest of the week. See you guys next week. Thanks.